You're probably wondering how a former US president who once called Bitcoin a scam could end up owning more of it than an entire nation. Well, on today's episode of the TFTC podcast, I sit down with Jim Crider, a financial advisor who's helped over 100 families build generational wealth through Bitcoin. Jim has a perfect track record. None of his clients have ever sold their Bitcoin holdings, even during the deepest market crashes. More impressively, he manages portfolios where Bitcoin makes up nearly half of his clients' investments. Today, he breaks down why Trump might be positioned to make the largest Bitcoin purchase in history. The truth is, El Salvador currently holds around 6,000 Bitcoin. Trump is talking about buying over 70 times that amount. But before we dive into the details, I need you to understand three things: why Trump changed his mind about Bitcoin, how the U.S. government would actually execute such a massive purchase, and what this means for Bitcoin's future. I've spent countless hours analyzing these market dynamics at my venture capital firm 1031, and what Jim reveals in this conversation completely changed my perspective on nation-state Bitcoin adoption. If you're enjoying this type of content, hit the like button and subscribe to the channel. This is just a small portion of my full conversation with Jim on the TFTC podcast. You can find the link to the full episode in the description below. Before we get into Trump buying Bitcoin, let me show you how financial advisors are seeing how detrimental it is to not own it.
The goal for this portfolio is to massively underperform Bitcoin. I hope that happens. But I also want to own it in case something happens with Bitcoin in the short term. This is sort of the antithetical thing to it. So yeah, and it allows us to not have, like, if you're a retiree, the classic portfolio is like a 60-40 stock bond. I don't like the 60-40 portfolio. So having Frankenstein in there allows me to feel a little bit more ease of not having 40% in bonds and cash. It is a somewhat bond substitute by owning all this deep value stuff.
Yeah, I think it's a smart play. Warren just dumped a lot of his Bank of America stock, and it seems like he's building up that. It's approaching what? It's hundreds of billions of dollars now at this point.
It's giant, like unbelievable. Yeah. It's just buy Bitcoin with it. So it's a lot of weird stuff. I mean, we have right now, we have exposure to India. I think on a long-term scale, internationally, I think India will outperform other international developed or developing markets over the next 10, 15 years.
I understand the desire to maintain exposure to traditional markets while building Bitcoin positions. What's particularly interesting is his mention of Berkshire Hathaway sitting on hundreds of billions in cash. Warren Buffett, who once called Bitcoin rat poison squared, now has his company positioned with an enormous cash pile during a time when Bitcoin is approaching new all-time highs. This kind of dry powder could be incredibly impactful if deployed into Bitcoin markets. Jim's perspective on India is also noteworthy. He sees it as a major player in the next decade of global markets. The way he's structuring portfolios, maintaining traditional value investments, while acknowledging Bitcoin's potential dominance, shows a thoughtful approach to bridging the old and new financial worlds. His mention of the 60-40 portfolio becoming outdated really hits home. We're witnessing the evolution of portfolio theory in real time as Bitcoin forces us to rethink traditional asset allocation strategies. This ties directly into what we're about to hear about regarding nation-state adoption of Bitcoin and how the game theory is playing out in real time.
Trump and RFK said, hey, we want to own 200,000 Bitcoin as our strategic reserve.
What's more than that, 1 million, right?
Well, back it was at the conference, it was 200 because that's what we owned.
Yeah,
that we confiscated through Silk Road and stuff. That's what they were wanting to keep. Like, all right, we're going to take that. We're basically, if we had done that, if current admin had not sold some, what would have happened is theoretically Trump gets in presidency, he moves our 200,000 Bitcoin and just like relabels it as, like, instead of like confiscated assets or whatever it's called right now on our balance sheet, and we actually give it a title of like strategic reserve. That'd be a cool move. But what's way neater now is if he's going to be like true to his word, let's say it's not even 1 million. He just gets back to the 200,000 Bitcoin he initially said. We have to proactively go buy it. So before, it was a passive retitling of what the Bitcoin is. Now we have sold some of that 200,000 Bitcoin. So we have to go buy some now. That is much more of a signal move. The US government purposely went and actually bought Bitcoin to build up a reserve.
The game theory of Bitcoin adoption at the nation-state level is fascinating to witness in real time. Jim breaks down a critical development in the narrative. the difference between passively holding Bitcoin from seizures versus actively purchasing it as a strategic reserve. This distinction is massive. When I started the TFTC podcast years ago, the idea of nation-states competing for Bitcoin seemed like a distant possibility. Now we're discussing specific amounts and strategies for the United States government to accumulate Bitcoin reserves. What's particularly interesting is how the current administration's decision to sell seized Bitcoin might actually force a future administration to make more aggressive moves in acquiring new positions. At 1031, we speak with institutional investors daily who are starting to understand these implications. The signal of the U.S. government actively purchasing Bitcoin would be unprecedented and could trigger a cascade of similar moves from other nations. The potential shift from passive to active accumulation by governments represents a fundamental change in how Bitcoin is viewed at the highest levels of power. This isn't just about investment returns anymore. It's about strategic positioning in a changing global financial landscape. The fact that we're even having serious discussions about Bitcoin as a strategic reserve asset for the United States shows how far we've come.
But I think there's a decent chance we are about to enter like the suddenly phase. Like we're on the right on the threshold.
Yeah, we're looking over the cliff right now. Like, are we going to jump?
Yeah, this really is.
We got our squirrel suit
really
on. Like, let's go.
I'm really, yeah.
All right, not financial advice, but what happens if we do take the jump off the cliff?
Oh gosh,
that's probably a bad analogy. Like get in the rocket ship.
We hit in a rocket ship. Man, I will be a little bit sad personally. So like where I'm at right now is last few cycles, you know, I'm like Lieutenant Dan, Bitcoin goes up some and I'm sort of excited on my own, but yeah, cool. I figure this is going to happen and we'll just keep going. This time around, over the last 4 years, I've managed to convince 100 families to adopt Bitcoin. So right now it's like super fun. So like I have people reaching out to me all the time, like, wow, Jim, like, thank you so much. This is awesome. Like changing individuals' lives, changing like generations, which is so rewarding.
Jim captures something I've been feeling lately, this sense that we're on the verge of a major shift in Bitcoin adoption. His analogy of looking over the cliff or being in a rocket ship really resonates with what we're seeing in the market. What's particularly touching is his perspective on helping families adopt Bitcoin over the last 4 years. At 1031, we often focus on the institutional side of adoption, but the real impact happens at the family level. Jim's experience of helping 100 families understand and invest in Bitcoin shows the human side of this technology. This isn't just about price appreciation or technology. It's about helping regular people preserve their wealth and create better futures for their families. The concept of generational impact through Bitcoin adoption is something that often gets overlooked in technical discussions about the protocol. His emotional connection to the work, feeling a bit sad that a sudden price increase might limit his ability to help more families, reveals the deeper purpose behind Bitcoin adoption. It's not just about making money, it's about creating positive change in people's lives. The enthusiasm in his voice when discussing the feedback from families he's helped really demonstrates the tangible impact Bitcoin can have when properly understood and implemented in a family's financial strategy. We're seeing a transformation from Bitcoin as a speculative asset to a tool for generational wealth preservation and creation. Now that you understand why Trump might become Bitcoin's biggest buyer, there's something even more important you need to know. Financial advisors managing over $20 trillion in wealth are facing mounting pressure to change their stance on Bitcoin. In my next video, I break down a fascinating conversation with Jim about how Wall Street giants are secretly preparing for Bitcoin adoption and why 2025 could be a defining moment for institutional investment. Click the video on your screen now to understand exactly how this shift could affect your Bitcoin strategy. And if you're serious about staying ahead of these institutional moves, subscribe to the channel where we break down these crucial developments every single day. Stack sats and stay humble.